This is going to be immensely beneficial video for long-term investing. So please do watch till the end. I think you will like it. Hello, everybody. Welcome to another episode of Beat the Market. I hope you guys are doing very well. So today I have a very special guest with us, Sam. He's my good friend and vast experience in investing, over 50 years. So I thought I'll bring him to you and learn about genius in investing. So welcome, Sam.
Thank you, Rakesh. It's good to be here.
Yeah, very glad you are here. And so, Sam, you have been investing for over 5 decades. That's quite a long period of time. And tell me about your experience and what's your principles in investing.
Yeah, well, I started investing as a teenager, and my father was an attorney, and he was an investor also. And as people, like many of these old-time investors, he was a buy and hold investor. He never, when he had money, he would invest. He'd put money away into stocks, and he'd never sold anything. And that was how he did it during the 1940s, 50s, 60s. And so he had at one point, he had about 150 different stocks in his portfolio. I thought, wow, for a teenage kid, there was always something that was popping. And I can remember when there was Texas Gulf Sulfur discovered uranium in Canada, and found a lot of uranium in a mine in Canada, and the stock was doubling in 2 or 3 days, and I was, something with a portfolio that size was always moving, and so I found it very exciting. So a good way to capture the imagination of a young man and get him interested in finance. And so that was the start of it. Things over the years have become much more short-term oriented, I would say. And with this latest bull market, I would say there are a lot of investors, young investors in it, and being home with a pandemic, people who have just been in for a few years and really have never gone through a bear market. And so I've lived through 5 bear markets or so, starting during 72, 73. I was actually working on Wall Street at that time for a commodities firm. But yeah, the cycles are very important, and you can kind of see certain patterns repeat.
Yeah, absolutely. I think we saw that. I mean, last year, the tech stocks, they were every day there's 3-4% gain, and last 2-3 months we saw they were crashing. And it's very useful for our generation to learn from your experience.
I'm a financial historian by the name of Robert Sobel, who wrote several books on the history of the stock exchanges, and he was very interesting. And that he taught me how, for example, at the peak of every bull market, he had an expression. He said companies would be coming public that would be, you could sell shares to the public of companies whose business plan was to mine green cheese on the moon, and people would buy the stock because it was going up rapidly. It was basically the greater fool theory in action. And so when I see things get a little bit too speculative, like the recent SPAC phase, it's definitely a late market cycle phenomenon. It's a red flag, basically, that you've got a mature bull market. Your valuations are sky high. You've got a lot of speculators who've made a lot of money, who've never even seen a bear market in their lives, and don't know that these companies that they don't really know the first thing about, other than that they're popular and hot, could be out of business in a few short years.
Yeah, I'm pretty sure many people learned their lesson during February. I think this bubble started crashing. Lots of companies lost their more than 50% from their recent high. So I think
I'm not saying it's imminent or necessarily, or that the market is going to crash this year or next, but the kind of the characteristics that we're seeing are for people who've been in the market for a long time, sober observers, whether it's Dean LeBaron or rather Jeremy Grantham of GMO in Boston, or other market observers who look at the market and say these valuations are getting pretty stretched, and so be careful. So Kathy had great success, of course, with Tesla, recognizing early on that here was a stock with tremendous potential. And she made a lot of money with it. But the question, and she set up a number of portfolios now, specializing in genomics and other fintech and other areas.
Fintech, robotics, and now space exploration, I think.
And there is some benefit in terms of diversification. Each one has 30 or 70 stocks in that, 30 to 70 stocks in them. So, but all are in the same industry. And these are very sexy, hot new areas, and she's buying IPOs on day one of the public trading. Coinbase has been down 5 days in a row. Could she wait a little bit? Could she be a little bit less eager? How will it do long term? I mean, I wonder. I wonder if whether it looks more like a venture capital type fund to me. Most of the companies are not profitable. Most of them have never made money. Some have very little revenues.
Yeah, I think that's very fair analysis. I think new age investor like us can learn a lot from. You have seen many market cycles, and yeah, go ahead.
At the same time, we are here in Northern California, just a few miles from Silicon Valley, and I have tremendous respect for Silicon Valley and what these local companies have achieved, especially because they gave birth to Fairchild, Intel, gave birth to the semiconductor, which is changing our lives in so many ways these days. At first, it was, people wondered, I mean, how many computers do we need in the world? Somebody famously thought that, we just have one big supercomputer, brain, and that was it. No, but there were.
Now we have computer in our pocket.
Exactly.
We have computers in our
pocket. So
in our cars, in our pockets, in our.
Yeah. So there have been at least 3 inflection points in the history of technology, as seen from Silicon Valley. The first being the birth of personal computers. Then the second being, I would think, the internet and networking computers, and then the cloud coming along, and now artificial intelligence,
gaming, and autonomous driving.
Right, AI, big data is the current inflection point, and there are now more transistors on the planet than there are human cells.
Wow, that's impressive.
And it is.
I didn't know that.
Yeah, it's just incredible how many transistors they're putting on an integrated circuit these days, and we've gone from 100 microns to 2 nanometers over the last 40 years. That would be like a car that, started, if the car could get 60, could go 100 miles an hour or 120 in 1975, the comparison with that, it would be today, it would be going something like 10,000 miles an hour, and you could just travel the globe in an hour and a half.
So this leads to my next question. You have been investing for so long. Do you have any favorite segment or industries where you like the most? Where
I like companies that have a sustainable competitive advantage, Rakesh. And I like companies that are a little bit seasoned, that have proved themselves, that have withstood the test of time. Because the early phase of even the very best companies is tough when you don't have enough capital and you're just getting started, and you have to raise capital and dilute existing shareholders. It's always, it's never pleasant to when you're you're not profitable yet, you're burning through cash. You've got competition, you haven't really proved your business plan yet, you haven't really established that your business model actually works and is profitable. It's tough. It's not easy to break into these markets. It's a complex world. These problems are difficult to solve, and there's a lot of money out there that to fund different types of projects. That's not difficult, but there are some really difficult issues, and investors are often, rather, there's a lot of speculation. A lot of people don't really understand what the business is all about. And so it becomes greater fool theory. People rely on others to explain what things are. People don't really know what they're investing in. So it can be a little bit difficult.
Yeah, that's good. That's excellent point. Technology is emerging. There are always new disruptive companies emerging, which are not yet profitable, but they're very tempting, and people are very attracted to those. How do you manage those kind of?
Good question. Yeah. Very good question. So in such a dynamic market as we have, where there's so many ideas and so many new things, climate change, how do you whether electric cars or power saving technologies or solar power, and Chinese competition and regulations, etc. There's such complexity in this. The way that I reduce the complexity is by trying to, we have thousands the menu is vast, so we can be very selective. And my approach is to focus on the enabling technologies, that things that are so basic that things that all the companies need to buy to do this. Basically, it's a selling picks and shovels to the miner approach to the gold rush, rather than being a miner oneself, because the risks of that are so tremendous. Instead, sell them the indispensable tools that are basic to be a miner oneself, whether one is mining for Bitcoin, or whether one is starting a gaming company or starting an AI, these companies.
Yeah, thank you, Sam. That was very insightful, and I hope our viewers, they will learn a lot from your experience. In viewers, thanks for watching. We'll be bringing more episodes with Sam and learn from his experience and wisdom. on stock investing. Please do subscribe this channel so you get my videos first. It also helps with the YouTube algorithm. So do hit the subscribe button. Thank you. We'll see you next time. Bye.